Hello everyone, welcome to Zyle Star new weekly market update with us with Mr. Amidian and Mr. Samer. New information, new updates. Go ahead.
Despite Donald Trump forcing the Feds to cut interest rates on the dollar, the Fed surprisingly decided to do nothing. And then Donald Trump says he's not going to fire Jerome Powell, which is surprising. And the tariffs are actually in action as of today, the 1st of February. So we'll see how this will drive financial markets.
So 1st of February is going to be the first date of putting more tariffs on China, Mexico, and Canada. And we had the mixed earnings from the corporates in the United States. Let's review it together.
All right, everyone, welcome back for another weekly market updates with Zyle Star. This is Samer here. I'm a senior technical analyst at the Institute. And as usual, we're going to kick it off with the dollar index. As we can see, the dollar index was attempting to continue its uptrend, and this was after the tariffs now are, as of today, they are in action, but once they were looming, we had a crash in the dollar, and this caused us to see on the dollar index a pattern which is a head and shoulders, which may not be too clear for a lot of traders, but it is actually a head and shoulders. We can clearly see two heads here, and here's the head, and this is the neckline. So after the break of the neckline, just as any other head and shoulders, we can expect market to reach to the next support, and it liquidated all these lows here because we had a lot of liquidity right below them. The dollar found a strong support at 107, and right now it's sitting at resistance of 108.5 approximate, which is in the middle of the previous resistance of the shoulders and the solid support of 107. So from here, after the break of this trend line of this descending channel, we can expect dollar index to trace to the trend line and the middle of this small range here. And then there is a very decent possibility for it to continue in an upward momentum. So this is about the dollar index. Now going to Bitcoin. Now Bitcoin, actually, this is on an hourly time frame. If we go to the 4 hours time frame, we can see that the price actually is in the middle of the range. However, on 4 hours time frame, we have a very big, solid engulfing bearish engulfing. And also we can see a clear, through analyzing candle psychology, we can see clear indications that bears are in control lately. So you might see Bitcoin actually fall into the levels of 96,000. This is a very possible probability, especially after the break of this ascending channel on 1 hour time frame. All right, so this is multi-time frame confirmations of bearish expectations on Bitcoin, technically. Right, going to NASDAQ. NASDAQ, as always, it's been consolidating for the past few weeks, and also we expect a continuation in this consolidation within this solid range of support and resistance. Now we can clearly see that there was an upward momentum in NASDAQ, but there was a crash in it that especially happened after DeepSeek came into the market, crushing the image of ChatGPT and other US AI softwares. Yeah, softwares, I think it's the best to express it. So especially after DeepSeek came in from China, offering so many features, so many advantages somebody can have on top of what they are having from US tech companies. And this is why we could see a clear crash in NASDAQ, which is the biggest US tech companies. Right, so right now we can expect a continuous consolidation within this range. So market might fall to this resistance, break it, and go to the support, and then find a solid support at 20,500 levels once more. Right, so this will be it for NASDAQ and DXY and Bitcoin, and I'll leave my colleague to let you know more about gold, EURUSD, and other assets.
Again, we are with Zyle Star Strategies. Let's check, guys, the gold and the Euro USD together. So we'll start with the gold market. As we can see in the gold market from here, the gold is raising up again, and he manipulates the last high, as I said, and as I told you guys, retracing a little bit. Then now he is there in the highest price in the world, which is 2,814, and this was expected. Now what we can see this is the resistance now in the actual price, and we can see the gold as a retracement from here, and from here he can drop again to our resistance. Now he is doing a support and resistance level, and he's balancing between these two, but he is in bull trend, very bull trend. Now going to the Euro USD, like it's showing a sign of trend reversal with higher lows. Okay guys, and I said before you, it will break this from here and it will come to liquidate all of these highs, and exactly he did the same thing. He manipulated till this resistance from here and this swing high from here and double top from here. He took all the liquidity and now he's retracing to the downside, where exactly in our support area, and from this support area we can expect again a high to the Euro USD. Thank you guys for watching. See you next week.
Hello everyone, hope you are doing all great. Once again, we are here to review the financial markets over the past and upcoming week. I'm Masoud Amidian, Senior Fundamental Analyst at Xylostars Head Office, which located in Dubai, UAE. So last week was eventful with key developments in geopolitics, economic indicators, and central bank policies. Let's break it down. First of all, I want to talk about the economic indicators. Last week already started on the disappointing note. China's manufacturing PMI came in lower than expected despite government stimulus efforts. Australia's inflation data also missed expectations, leading market participants to price in a potential rate cut by the Reserve Bank of Australia. On Wednesday, 29th of January, both the Federal Reserve and Bank of Canada announced their latest policy decisions. So the Bank of Canada cut the rate by 0.25% to 3% in line with market expectations following weaker inflation and retail sales data. Meanwhile, the US Federal Reserve held rates steady at 4.5% despite ongoing economic and political uncertainties. A key change in the Fed's statement was the removal of the phrase "inflation has eased over the past year." This shift signaled a more cautious stance on inflation, leading to market speculation about the Fed's future moves. However, Jerome Powell later clarified that housing inflation, which has been a major concern, is now easing and it's still on track toward the 2% target. His comments were interpreted as dovish, and it caused the financial markets to reach higher stages. So let's talk also about the European Central Bank. The ECB decided to cut the main refinancing rate from 3.15% to 2.9%. Christine Lagarde addressed the economic outlook, noting that while inflation is expected to reach 2% by 2025, wage growth and trade tensions pose risk. She also highlighted a strong labor market, consumer confidence remains fragile, and manufacturing is contracting. About the US GDP and inflation data, so the US flash GDP report showed a revision of third quarter growth from 2.8% to 3.1%, but the fourth quarter of 2024 growth missed expectations, coming in lower than forecast at 2.3%. The US PCE index, the Fed's preferred inflation gauge, was in line with expectations at 2.6%, while core PCE came in 2.8% annually. So we had also some speeches from the FOMC members. Fed Goldsby expects inflation to reach 2% with unchanged expectation, but he noted that policy uncertainties could impact future decisions. He predicts lower interest rate within 12 to 18 months and sees the labor market as stable. Regarding to the Bowman, she was the next speaker, and on the other hand, she supports rate cut this year but prefers a cautious, gradual approach. emphasizing that wage growth is still too high for the 2% inflation target. Regarding the corporate earnings, last week's corporate earnings were mixed. Microsoft missed expectations while Apple and Intel exceeded forecasts. Chevron and ExxonMobil also had varied earnings results. Geopolitical and market volatility. So Donald Trump reintroduced the option of tariffs on Canada, Mexico, and also Europe. As of February 1st, new tariffs on Canada and Mexico will take effect, increasing market volatility, which was evident on Friday, 31st of January. Let's dive into the upcoming week. So for the upcoming week, I just want to start it with the corporate earnings of the United States. So we are gonna have a wide range of corporate earnings in the next week. Some giant companies like Spotify, AMD, Uber, Ford, Amazon, Qualcomm, Walt Disney, and Google Alphabet, Spotify, Pfizer, Pepsi, and other giant companies are gonna release their earnings for the next week, and it can play a crucial role for the sentiment of the investor. Let's have a look for the economic indicators. So next week I want to start it with the Monday, 3rd of February. We are going to receive the ISM manufacturing PMI. Later we are going to have job opening numbers for the United States on 4th of February at 7 p.m. to UAE time frame. Also, we are going to have the ADP number for the United States dollar plus ISM services PMI, both on 5th of February. Regarding to the UK, we are going to have monetary policy summary and a speech by the chairman of the Bank of England, plus the monetary policy report for the Great British Pound on 6th of February at 4 p.m. And eventually for the 7th of February, which is Friday, we are going to receive the most important economic indicator of the week, which is the NFP for the United States. So stay tuned. Don't forget, always mix fundamental and technical together. The result would be amazing because it can increase your win rate.
Now, before thank you for watching, guys, there are conspiracies about California wildfire is being made up. It's a setup. Let us know what you think in the comment section. And now don't forget to like, subscribe, and share, and all of these things you do usually. And thank you for watching. I will see you in the next video.